Good morning, ladies and gentlemen. It is an immense pleasure to be here. I am very excited for a couple of reasons. The first is just that the topic is one that's particularly exciting. I mean, all of the action at the moment, when I've been traveling, when I'm talking to people both in Africa as well as people in business on the buy side here in London and elsewhere, sort of private equity and investing in Africa are just top of everyone's minds at the moment. And I know that there was a lot of discussion yesterday about some of the risks, and you've gone through Ebola. We've talked about that kind of stuff. This is the panel that we're really going to be talking about some of the opportunities and some of just let's get in there and get our hands dirty. While we're all talking and having the stage, I want you to sort of keep your thinking caps on and get ready to fire back and ask some questions. We've got a great panel here, and that's the other reason that I'm so excited. These guys they're on their game. We were in the speaker's room. I couldn't get them to shut up and sort of leave their coffee and come out here because they are just, the dialogue that they've been having about, is it oil and gas? Is it Ghana? Is it Zimbabwe? Where is the next big opportunity? Trust me, it was difficult to get them out of here. Once they're up, once they're speaking, it's going to be difficult for me to keep them in check. So I'm going to do my best, but you're in for a real treat here. And the third reason that I'm very excited is we have a surprise guest. The First Lady of Uganda has joined us. I'm afraid for security reasons we couldn't put her on the program, but she's going to start with a bit of an overview of where she sees business and inequality and some of the opportunities in Africa.
Thank you.
Please.
Thank you. Thank you so much. I want to thank the organizers for bringing me on board. And I also congratulate my colleagues who are here and made the time this morning to be on this panel. I trust that our discussion will emerge a broader debate and eventually a consensus on how to configure business and investment so that the global economy can grow and benefit people in Africa, those who have hitherto been marginalized. In Uganda, I head a ministry responsible for development of the Karamoja region. This may not mean anything to many of you, but Karamoja are the cousins of the Maasai, if you know the Maasai in Kenya, if any of you know that people in Kenya. And these have been disadvantaged and undeveloped. I work again on a daily basis with deprived women, orphans, poor children, and communities in that area. At the same time, by the nature of my work, I am exposed to investors, rich business people, and the affluent society in the world. I'm concerned that the reality of a polarized world of the rich, mainly in the Western countries, and those living in abject poverty, mainly in sub-Saharan Africa. I personally believe that Africa is the opportunity now for the world economies to grow even more and faster today. The conditions in many countries in Africa are now permissive and acceptable for private equity investments that are rewarding and highly profitable. Now, why do I say this? Because by its nature, private equity will bring on board the badly needed capital and also help to streamline the management, two of which are the important inputs that can grow the system and help a company to move to another level overnight. Africa now has a rapid growing middle class and a big population of educated but unemployed youth. Therefore, raising employable personnel is no longer a problem anymore. In many of our countries, industrial revolution is underway. Countries are now producing manufactured products for their own consumption and for regional markets. There are many industries in the energy sector, agriculture, and mineral processing. And just like the countries of the West, those that provide the capital to fuel the growth in Africa reap the benefits. Africa also provides better returns. The average internal rate of return in Western markets since 2000 has been under 5%. Africa and other emerging markets offer close to 10%. Target returns, and many of the invested funds are meeting and are exceeding these targets. In addition, the perception exists that Africa is much riskier than the rest of the world. Whereas that might be true for specific countries, many countries like Uganda and Kenya have not had the same economic shocks at the moment. For example, Uganda has shown growth steadily at 6 to 7% in the last 30 years. Uganda, under the current government, has never nationalized a company or thrown out any national contracts. Therefore, it is my considered opinion that for the world to experience equity and sustainable economic growth, we ought to focus on a number of issues. One, industrialization of Africa to release the latent economic potential. Our experience in Uganda has demonstrated that the abundant raw materials can lift our economy unless we do value addition, and that's what we are really focusing on. African markets are an opportunity. Africa offers a great opportunity for Western industrialized economies to expand their markets and reach even more attractive rates of growth. And the mistaken views that Africa is not an area to invest in should really go out of the window at this moment. And that's why I'm here to appeal to the private equity investors, the corporate world, and industrial institutions to adventure into Africa with the appetite to create investments that generate profits for themselves and for Africa. We have the duty to break the boundaries of global economic ceiling and innovate new models and embrace greater opportunity to achieve an equitable and sustainable economic growth for all humanity. It is only then that we may have a glimpse of a better world for all. Thank you for listening to me.
Thank you very much. Now, traditionally, the job of a moderator or a chair is to say a few introductory words about each of the people here. And the basic purpose of that is for me to tell you how smart they are. So, I could tell you that they were, chairman of the chess club, but actually, I'm going to save all of that because these people actually don't need me to tell you how smart they are. They're going to prove that through their own words. So I'm just going to let them introduce themselves and say a few words about what they're doing. And Rob, let's start with you.
Okay, just very quickly, my name's Rob Hersov. I'm a fourth generation African, born in South Africa. My grandfather founded what became one of the great mining industrial companies in Africa, Angloval, which created some great brands like Irvin & Johnson, Five Roses, Baker's Biscuits, Consul Glass, Anglo Alpha Cement, and we were involved in a lot of mining as well. I personally have 4 businesses, 3 of which have Africa angles. There's VistaJet, which is one of the largest private jet companies in the world, a much better proposition than NetJets, in case any of you are flying NetJets. Call me afterwards. The second is Sapinda, which has a number of investment areas, but 2 of which, coal and agriculture, are heavily invested in Africa. And yesterday you would have heard on the Agri panel from Frank Bracken, who's the Chief Investment Officer of Amatheon. But the business that I'm absolutely behind, passionate about, and my new business is called Invest Africa. And Gianpaolo Pera, who's sitting in the room here, and I set it up about 18 months ago. No business plan, no vision, and had no idea what we were doing, other than the fact that we love Africa, we believe in Africa, and we've committed a lot of capital over many years into African opportunities. And Invest Africa started as a private members club to connect interesting people doing interesting things with interesting opportunities. There are a number of the members here, Deepo, Miguel, and others I can see, Sean I can see in the room. The business has grown like a rocket. Bob Diamond called me after a few weeks and said, I love what you're doing, I want to be involved. We launched in London, New York, Johannesburg, Dubai, Geneva, Zurich, and we're launching in Paris before the end of the year. 350 members, all of whom are investors, entrepreneurs, people taking risks, losing money, making money, committed to Africa. And on the back of that, we set up a business called African Capital Investments, which is a deal origination platform. We closed our first deal 2 months ago, East Africa business process outsourcing, $10 million investment where we wrote a $2 million check. But we're doing a lot of deals right now, and we're very excited about Africa. And if I can get 30 more seconds.
Yeah.
Do you remember the old days when people used to talk about BRICS? Brazil, Russia, India, China? If any of you are doing business in Russia or China right now, you've got to be crazy. And India, as you know, is unbelievably difficult. Unbelievably difficult. But Africa, we have a real opportunity. Because the capital that's now realized it's just too hard to go to Russia and China ought to be looking at Africa. We've got the growth rates, we've got the potential, we've got the opportunity, and we've got the people. So I'm really excited about Africa. And if I sometimes come across as a little critical, it's because I really believe in our continent. We have a chance to get it right. Let's get it right. Thank you.
Thanks, Rob.
Have I said it all?
So you know where to go to get a good deal on jets. Yoki, are you going to tell us, can you offer them a good deal on bank accounts?
No. Rob is always a very tough act to follow. So, but let me say something. You know, when I was born in a, I don't have connections like Rob in Africa. I was born in a very poor country at the time. The country is called Finland, right? One doesn't think about it, but basically it was a developing country. And today, of course, Finland is part of Scandinavia, I guess. Just lost their AAA, but they're still pretty good. But the point I'm saying here is that we all go through a journey. I then subsequently joined, at some point, was an entrepreneur, but became then a party to a person joining IFC, which is the World Bank's private sector arm. Stayed there for quite a while. At the end, one of my jobs was Vice President of Africa, then I was also ultimately responsible for all of the investments. Now, we invested to a lot on, we grew in my watch in Africa investment from 100 million a year to about 3 billion a year. So that's my claim of fame, if I use that word. That's my Africa connection. But I'm going to leave you with a couple of thoughts. Now, today, I'm actually part of a group of people, interesting group of people that started with a new venture called Atlas Mara. I'm going to come back to a bit later, but one of the issues that is going to hamper Africa, if you look at today, banking, first of all, it's a bad word, as we all know. Everybody looks at the papers. Banking is it's not a very nice to be a banker today. In Africa, banking is the most profitable banking in the world is done in Africa. Happens to be ROE is about 20% plus on the average. The other thing is that it is the least efficient. If you look at the cost structure of banking in Africa, it's by far more costly than any other place in the world. And then you look at how these banks are traded, it's pretty miserable. So when you look at that background, I don't care what you do, but we need to get pricing correct in Africa, otherwise every single industry will suffer. So that's the hypothesis that I had. Now, the other element is to say, in the PE world, if I use the word investment world, everything I heard, I mean, IFC was a party to pretty much almost every single fund that was, including most of the ones that are here. And when you listen to the investors, you hear two words. One is liquidity, and the other one is transparency. For Africa to change, you need to have a lot more capital coming in, whether it's a banking or actually investments. So we came up with the odd structure, first one ever done in the world, which is a sort of a publicly traded, focused PE vehicle, but it's actually a publicly listed company. Bob Diamond, thanks for advertising, Rob, is part of it. Ashish Thakkar, who's an eternal entrepreneur, like some of us, in Africa, is one part of it. The chair of Atlas Mara is Arnold Ekpe, who a lot of the people over here know used to be the CEO of EcoBank. Now, the idea was to create a vehicle where investors can invest. Surprising fact for me was, yes, we raised a lot of money. We're continuing raising it. A lot of it was money that had never, ever, 80% of money was never invested to Africa before. Why? Because they don't have a window for PE, but these are the pension funds, most of them are in the US. So in a sense, all I'm trying to say is, A, we have an industry which is critical, meaning banking, for any industry in Africa, and you got to get it more efficient and the cost down to a level. So it has a great opportunity for somebody like us. You have to be operators. The other one is to say, there are pools of capital that don't even touch Africa yet. So you need to be a bit more innovative to actually achieve that. It's a bit early to say, but frankly speaking, we've invested almost $1 billion in 7 months, which is, people don't think about it, but I haven't seen too many PE plays that do that well. Now, that's thanks to my partners, but it's also, there's a huge need. There's tremendous opportunities, but it's also how do I use the opportunities that we have to actually generate more interest on the market. The perception of Africa, we all know that, is it's like 10 years behind what it should be. Everybody is still thinking the famines and all the rest, and yet the investments, when you add them up, and the growth rates are such that there should be like 20 of us here on the floor instead of just 5 of us. So I'm passionate. The question is it how fast it's going to grow? That's the only question mark. Should one be focused? We happen to be focused. I believe on being focused on any investment. But it's Africa is where, where India or China were 20 years ago. So, but can it catch up? Yes. It's going to leapfrog. So we believe it. And I hope everybody else, I haven't seen too many hands up that they don't believe it either. So we should figure out how do we help each other. But the fact, again, is I go back, it's the most profitable banking in the world, which means somebody's making a lot of money, and it's the least efficient. So whatever you do, it's a great opportunity, and the more there are, the better we all are to actually get the rest of the business moving. So I'm going to leave it at that.
Excellent. There are a couple of thoughts that I want you to hold on to, and one is, the kind of pools of capital that have, not touched Africa for the first time. We're going to come back to that conversation. I think that's a good one, and sort of what are the windows in. But before we do that, Afsane.
Great. Well, thank you so much. It's an absolute pleasure to be here. So my name is Afsane Jetta, and I manage an Africa-focused private equity group/fund inside a global asset manager called the Duet Group. By way of personal background, I am also a fourth-generation African. I grew up primarily in Tanzania. My family has been there, I would say more than a century. And I've been investing in the private equity space, most notably in the consumer and healthcare sectors for about 12 years. Have been focused entirely on Africa for the last 5 or 6 years. Just a little history on the Duet Group. So the Duet Group is really a frontier markets, emerging markets investor. We manage around $5.5 billion, half in public equities, half in private equity. We're one of the earlier investors in the public equity markets in Africa. And about 3.5 years ago, started a dedicated Africa private equity effort. We've invested roughly $140 million, which is not huge amounts of money, but we focused entirely on the consumer-facing sectors, and specifically on what we would call the emerging African economies. So economies such as Ethiopia, Tanzania, Mozambique, and notably the French-speaking African countries where we feel there's been a lack of investment, versus some of the more developed African markets such as South Africa, Nigeria, and Kenya. And our thesis really is, we really just focus on about 6 or 7 countries and entirely on consumer-facing companies. So that's food, beverage. We made a very large investment in a brewery in Ethiopia 2.5 years ago. Very difficult deal to get done, but as a result has been, knock on wood thus far, very successful. And when we think of consumer, we also think of financial services, agriculture, agro-processing, and healthcare. And we see these sectors as particularly interesting because they're all correlated to the growing middle class. But specifically in these emerging African countries, there's a huge disconnect between where these industries are today versus where they could be or should be. So if you take the example of Tanzania, Tanzania borders Kenya, actually has a larger population than Kenya, has sort of similar GDP per capita, yet banking penetration is less than half of what it is in Kenya. If you look at Ethiopia, second largest population in the continent, I think this year will be the fastest non-growing oil economy in the world. Banking penetration is sort of 1/5 of what it is in Kenya. For a lot of structural reasons. I mean, today it's very difficult to get a banking license if you're not an Ethiopian, although that is changing. The Ethiopian government has very strong links with China, and now Chinese banks are able to lend to Ethiopian companies. But we really see that there are pools within Africa where consumer businesses, where financial services businesses have been very successful in being able to take those and make them regional and penetrate some of the more emerging countries we think is very interesting. I think another sector we think is very interesting is the healthcare sector. So unfortunately, as many people know, Africa bears 24% of the world's global disease burden, but yet only spends 1% on healthcare. That's a tragedy for the continent as a whole, but also provides a huge opportunity to invest in consumable, mass market healthcare opportunities, and that is something on which we are very focused. And then I guess what I would say finally is just going back to the concept of perception of risk. I think one of the great opportunities for everyone in the room is to capitalize on this kind of misperception of risk in Africa. There are countries that are very risky, and there's countries that are very risky all over the world. But one of the biggest perceptions of risk is corruption and lack of transparency. I think many people might be very surprised to hear that a country like Ghana has a higher transparency international rating than all of the BRIC countries, and has for a significant amount of time. And I think as a result, a lot of these countries and a lot of these investment opportunities have been overlooked. There are fantastic manufacturing opportunities across West Africa. It's a tragedy that most of West Africa still is a net importer of manufactured food. Not only is this devastating for the development of those economies, but it provides a huge investment opportunities for people who are interested in food manufacturing, interested in agro-processing, to create African brands and to create companies that are regional that can become the next Nestle and the next Unilever of the continent. And those are really where we see the most compelling opportunities.
Great, thank you. From consumer-facing industries to hard infrastructure and power, Scott?
Thank you. Good morning, everyone. Scott Mackin from Denham Capital. Very briefly about Denham. Denham has just about $8 billion assets under management across 6 funds that it's managed. Our history is that we came out of Harvard's endowment fund 10 years ago, and then we've got a broad base of institutional and high net worth individual investors. We are energy focused. That's all we do. 3 things: oil and gas. That is predominantly North America based and not really of much interest to you here today. Power, which I run and I'll spend some time on, and then mining. Across our 3 verticals, we've got a commonality that we're very thematic investors. We find themes that we really want to invest in since we can go anywhere in the world. We vet those themes very significantly to make sure that there's some sort of edge that we have. And then, if we feel comfortable with that, we look for the best management teams to back. And I would say this is a direct rip-off from the U.S. oil and gas private equity industry, where it's worked exceptionally well, where you can back management teams that have asymmetrical knowledge or bring something else to the fore that helps us deploy capital in an appropriate fashion throughout the world. So we're very relentless about that. And then, after a theme and a team, do we do deals. And so very briefly, what I'd say that on our mining side, where we have teams throughout the world, in Africa we have a team called Pangea Resources that we back, seasoned 20, 30-year executives in the mining industry across Africa who we clearly believe bring asymmetrical knowledge. They've made right now some small early stage investments in DRC, Gabon, Liberia, Cote d'Ivoire, and they're looking elsewhere. So that's our mining element for Africa. On the power side, we're very specific about what we do. We've got a build it and a buy it strategy. Our build it strategy we spend most of our time on, and that's going into high growth economies. They can be emerging markets or otherwise, but high growth economies that are in need of power, new power resources, where we can come in and undercut the variable cost of power, largely get long-term contracted, what I would call infrastructure assets that we create with scarcity value. But the gap that we're filling, and doing that again in partnership with management teams, is that development and then through construction gap. You know, we're of the view that there's plenty of capital for operating power plants. There's a good deal of capital, less, but a good deal of capital for plants that are ready to be constructed, financial close. There's not that much knowledgeable capital that can do everything to take these projects from conception through to financial close. And so that's the area that we focus on in our Build It strategy. But just to give you an idea of what we're doing around the world, we just completed this year a $1 billion coal-fired facility in the Philippines, the only Chinese construction that we're aware of for a coal-fired facility that was under budget. It's the same contractor that did Morapule in Botswana, and they finished up under budget for us. We are building wind in Brazil. We're building solar in Australia and Uruguay. We're doing gas-fired generation in the Middle East. In Africa, we have 3 different management teams that we work with that are looking to deploy capital. The first, by order of date, is Biotherm Energy, based in Fourways outside of Johannesburg. They've got 3 renewable projects up and running in South Africa. They'll be breaking ground on projects of solar in Zambia, and next year probably another 50, 75 megawatts in West Africa and elsewhere on the continent. A very, very much indigenous team that we're very proud to support, and we think they're truly the only African-centric renewable team there. And then we've got a global play, Photowadi Renewable Ventures, that does solar throughout the world. They've got a very influential partnership that they're working on a variety of projects throughout Africa with right now. I'm not at liberty to disclose. And then finally, our Endeavor Energy, a team that we helped put together with their CEO, did the first IPP project in Nigeria back in 2000. They've done a lot of IPP around the continent and elsewhere. Very talented group of people. So we have with them, with Endeavor Energy, we've announced Ghana 1000, a partnership to put 1,000 megawatts of combined cycle gas turbines into Ghana with GE. They are working to expand the Bambuna hydro project in Sierra Leone from 52 megawatts to 252 megawatts with the government right now. And then they're working on a variety of other projects around the continent.
Thanks, Scott. We're also going to come back to this because I think power and energy infrastructure are huge areas. But in the meantime, you get the last word, Tutu.
Hi.
At least for now.
Yeah, we're ever so slightly different from everybody else because most of our focus is in the public space. And whilst we don't do private equity, we compete with private equity because a lot of the listed companies do have significant private equity holders. So my name is Tutu Ajari, and I run Nubuke Investments, which is an African-owned, solely African-focused asset management company. We have our brand product, which is the multi-strategy fund, and it's different in the sense that we just don't invest in equities, we also invest in convertible bonds and fixed income. We're of the firm belief that from time to time, within the African continent, fixed income offers equity-like returns without the sort of risk, especially in times of crisis. And you can get double-digit returns in local currency with the appropriate hedges. And so we see that as quite a big opportunity. So that's sort of the day job. And we raise money primarily from international institutions. Our focus is on sub-Saharan Africa. We do have some investments in South Africa, but primarily focused on South African companies which have most of their revenues or most of their focus in the rest of Africa. And really at the moment, the key areas of investment are the East African region, taking advantage of the reduction in barriers and the increase in cooperation between the East African community, Nigeria, too big to ignore, and a few other countries. In addition to that, I sit on the board of Tullow Oil. I never talk for them, but it gives me a very different perspective, given the fact that it's the largest independent oil and gas company in the region in 17 different countries. And then I'm actually quite heavily involved in the arts. For those of you who are involved in the arts, the big London Arts Fair last week, Freeze, I sit on the board of 154, which is the largest contemporary African art fair, which just completed at Somerset House, just around the corner. Very successful indeed. I also chair the Tate Moderns African Committee, co-chair that. And so heavily involved in the arts. And if you're looking for another sort of investment opportunity, if you look at the change in the value of African artwork, you'll see that it's providing better returns than some of the equity markets or even private equity at the moment. So, buy your Ellen Atriz, buy your Pieter Hugo's, because they are going to do incredibly well. The opportunity set in Africa has been described earlier on, and I think that the opportunity set that exists is one for those who are prepared to take advantage of the difference between perception and reality. At the moment, Ebola is Africa. There are people cancelling safaris in Botswana, not realizing that Madrid's closer to Senegal than Botswana is. And so because of that, the value of assets has changed significantly, which means that for those investors who are to stick with the facts, do their due diligence, there are opportunities and returns which you don't see elsewhere. And that's one of the things that myself and my team is a bunch of Africans with quite a lot of experience working in Africa, systematically sift through the investment opportunities across all sectors. We have investments in financial institutions, we have investments in telecommunications, we have investments in consumer goods companies, and we're continuously looking for well-managed, well-run companies in countries where the macroeconomic risks are not so great, and we're looking for companies which are growing at multiples of GDP, and companies which have an edge in some shape or form. And then it's a question of sorting and adjusting the investments that we make in each country to ensure that we have a broad-based set of risks. So most of our investors essentially outsource their exposure to us. And we run a fund which has a very low correlation to the rest of the world, so it means that we sit very nicely within portfolios of companies. And we spend a lot of our time not just looking at what's going to happen today, but what's going to happen over the next few years. And everywhere we look on a relative basis, the lack of capital investing in the continent means that valuations relative to the opportunity set just don't make any sense. If you look at, as has been said earlier on, the banking sector in Africa is the most profitable sector in the world, and yet you go to Nigeria, it's almost the cheapest banking sector in the world. It doesn't make sense. Are there real risks that we don't understand, or are these enormous opportunities? And that's what we spend a lot of our time doing, and that's essentially what we go about doing when we come to raising funds. So we're in the process of raising money for another couple of funds because we have some very specific opportunities where the return set that exists bears no resemblance to the risks, and we think that investors will find them pretty interesting. Thanks.
Thank you very much, TJ. I think some of the points that you also just raised are great. We all know the old joke about two economists walking along and seeing a $10 bill and saying, the one says to the other, can't be there because the market would have, if it was $10, someone would have picked it up. And essentially, you're saying to us that in Africa there are diamonds on the street waiting to be picked up. So we're going to come back to that in terms of valuations. I'm just going to ask, could the organisers send someone to help you with your... Are you sorted? Okay, you're sorted out. One of the things that struck me about all of these conversations, there were some mentions of Nigeria and South Africa, but those two big economies were sort of considerably underweighted in these comments compared to what a lot of other people would be saying. A lot of the time when you talk Africa, people say Nigeria, South Africa. Let's just run through it, and we're not going to do this in order, but what are the big opportunities geographically, and where does one go beyond just South Africa, Nigeria? Volunteers. Rob.
I mean, I think you can pick themes. So you can pick the oil and gas theme, and then you really got to be looking at East Africa. And a lot of money is flowing there. And then everything that relates to that development, supply, logistics, ports, roads, Irish pubs, everything that goes with the development of, you get the picture. So you can pick themes, but you can also pick countries. I mean, I think Ethiopia is particularly exciting, the size of the economy and the fact that people think it's a closed economy. It's actually not that closed. I mean, it may be closed for telecoms and financial services currently, but it's wide open for every other sector and a lot of investments going in there.
Absolutely.
Yeah, in addition to Ethiopia, I would totally agree. I think one of the biggest regions where we see opportunity and we don't see as much competition for deals is French-speaking West Africa. So, a lot of people don't realize, but a lot of those countries are part of the Waiama region. If you get a banking license in one country, you automatically get a banking license, I believe, in 12 other countries. And that whole region's currency is pegged to the euro. So you automatically, in a lot of levels, eliminate currency risk. Two specific sectors that we think are particularly interesting are retail banking and consumer food. Those are kind of, if you look at other parts of Africa with similar GDP per capita, similar population flows, investing in French-speaking West Africa, a lot of which is also part of the ECOWAS region, so moving goods and labor across countries is relatively easier. There's been very little investment into food manufacturing and food retail in those countries, largely because there's a language barrier, but there's also more of I would say, sort of a cultural legal barrier. A lot of those countries follow the French Napoleonic legal system, not the common law English system. So a lot of traditional Anglo-Saxon-based private equity investors would find it a little more challenging. That being said, you have seen a lot of Moroccan and French banks investing in that region. So we also think that the French-speaking West African countries present a very compelling investment opportunity.
Yeah, please go.
You go first.
Yeah, just from my side, I mean, maybe I would rephrase your question a bit differently. If you look at it, where do you make the best returns, or where do you have the most underserved market segment? Whether it's oil and gas, you go to a place where nobody else is actually going, but there are great opportunities. So whether we like it or not, a lot of it is also a question of population play, right? If you go to Nigeria, there's a lot more people in Nigeria than there are in, let's say, Mali, right? So it's a question for me is when you look at investment, you try to go for the underserved market segments, right? And that's the same thing. That's one of the reasons I'm passionate about banking, because today it just doesn't make any sense if you look at logically why banking is so profitable, why it's the least efficient throughout Africa. My colleagues here had said, why is it that Nigeria, the banking assets are completely mispriced if you look at it?
Yeah.
Now, that's because there's a lot of growth rate. But so it depends on what are you looking at investing into, whether it's consumer goods, banking, and whatnot, but you're actually investing into underserved situations. And that's where you make the best returns, when you find this mismatch between the perception and as well as the demand. And that's why I think it's rather than focusing on a country, because I don't think the country itself is so much of an issue.
Right. Scott, yeah.
On the power side, you're not constricted by South Africa and Nigeria at all. I mean, South Africa's done a wonderful job with the renewables program. They really have generated a tremendous amount of new generation in a very quick time. Nigeria's having their issues. They've got to get their first new phase IPP project done with partial risk guarantees, and maybe that'll break a logjam for them. I think the privatization may have gone well in terms of selling assets, but maybe people mispriced some of those assets. We'll find out over time. If you look at Africa for power generation, sub-Saharan Africa, the same amount of electricity generation as Spain. Take out South Africa, the same electricity generation as Norway. So now you're really going to places where the government recognizes the need, is willing to be commercial, and try to get their deals done. And that's a pretty wide spate of countries across the continent.
Yeah, yeah. We've spoken a bit about, I suppose, some of the geographies, but market access. How tough is it to get into some of the some of the markets that you've been talking about? I mean, I guess the anecdote that people mentioned to me is, at least in Johannesburg, a lot of people say, we looked at Nigeria, we ended up coming to South Africa, even though the opportunity is not as great, but just, it's an environment we understand. But let's talk about market access and.
I mean, I have a slightly different view, and I think that it is not true that South Africa is the gateway to the rest of Africa. I think South African companies have had ample opportunity to take advantage of the rest of Africa opportunity and have singularly failed. If you look at, when we go scouring for South African companies who generate more than 50% of their revenues from the rest of Africa, there are very few. Yeah. And even those with headline South Africa strategies, or rest of Africa strategies, there are 10, 15 years away. So if you want to go into rest of Africa, you need to go to the countries themselves. And whilst there might be a perception of, yes, if you're trying to put $1 billion to work in 5 minutes, it's very difficult to do because there are very few bankable projects of that size. But the return set that exists outside of South Africa, the South African economy this year, if we're lucky, it'll grow at 1.5% this year. Nigeria, with all of its power issues, will grow at 7%. Ghana, with a few of its issues, which hopefully in the process of being resolved, will grow at 7% this year. And if you look at banking assets relative to GDP, if you look at the number of bank accounts that exist, they're a quarter of what they are in South Africa, with valuations half the price. So, you wouldn't even contemplate, if you're a brand new investor going into Africa, you wouldn't start with South Africa. Yeah. You might base yourself there because Cape Town's a nice place to live, but you spend all your time at the airport traveling. So I don't think South Africa comes into it at all when it comes to investing in rest of Africa, and we have less than 5% of our assets in South Africa, and I don't see that changing for the foreseeable future. It's countries like Ghana which have, the rule of law. They have a benign political environment. Nigeria, we're due to have an election in 6 months. Nobody has any expectation of many issues. And whilst the conversation might be dominated by things like Boko Haram, guess what? If you're investing within 50 kilometers of the coast, where 80% of the tax revenues are being generated, they're not such a big issue.
Yeah. Do you want to just carry on with that thought, though? Because I totally accept the point that the bigger opportunities are in the geographies that you've mentioned. What is holding people back? Is it just a misplaced perception of risk? Is it sort of genuine regulatory market access issues? Why have people been slow to grasp that opportunity? John?
I think the opportunity is relative. If you're a Midwest US institution who's put your money into Tesla and watched it doubled, why should you take, or 5 years ago you went into BRICS, which has failed spectacularly, why take the additional risk? Your liabilities are in the US. The returns are relatively decent in the US. It's the second fastest growing big economy in the world. So I think that on a relative basis, it's easy to say, stick where I am if I'm in the US or if I'm in Europe and not take the risk. Yeah. Whereas the smarter investors are actually the ones taking the risk because they're generating additional returns. And Africa's, 2.5% of global GDP. You're not asking for people to put 20% of their assets into Africa. You're asking for 1 or 2%. Yeah. And that's the $80 billion a year necessary to go into investment. So the smarter investors are getting off their backsides, are raising their funds, are putting their money to work, and are generating the returns. And hopefully they're the people who are in the room today who will be walking out of here having written big checks to the likes of ourselves.
Yeah, so
I might have a slightly different perspective on it, because we at Duet, sort of our strategy is to put to work anywhere from 20 to 50 million of equity value per transaction in our specific 6 or 7 countries. And I think one of the questions we often get is, how do you find your deals, and how do you find the right opportunity in which to invest? And I think one of the challenges of maybe being sort of a US-based player, or maybe being a European-based player that doesn't have strong links to Africa or offices on the ground, is just finding these opportunities. So in terms of the advisory business or the investment banking business in Africa, specifically in countries like Ethiopia, Tanzania, Mozambique, French-speaking West Africa, there aren't 5 Goldman Sachs offices. There aren't, a lot of these opportunities are family-run businesses who aren't actually familiar with private equity as an asset class, who generally find the whole concept of private equity quite suspicious. Maybe they've read Barbarians at the Gate, and that's kind of their understanding of what private equity as an asset class is. So a lot of our time and the time of our team is spent actually on the ground, working our local networks, meeting with people with whom our families have done business, or meeting with people who are expats who are part of the diaspora that's returned. Because if you're sitting in an office in Washington or sitting in an office in London, looking for great proprietary African private equity deals, they're unfortunately or fortunately not going to show up on your desk. You kind of need to go and really integrate yourself into the local economies, get to know the banks, get to know the businessmen, get to know influential people in that country, because the advisory business is not at the smaller end of the market that well developed.
Rob? I think there's incredible complexity in understanding Africa. If you're taking Tutu's example, sitting somewhere in the Midwest, and you go on Google and you type in Africa map test, and I dare all of you to do this, we did it in the office. I got 98% of the countries right, like where the countries are. I got Benin and Togo mixed up. Sorry about that. But if you ask any American who, as you know, they don't study geography, international geography at school ever, to try and understand Africa, it is impossible. It's impossible. So that's just the first stage. So you can't really blame them for sort of having a look at Africa and going, forget about it. Unless you focus. So if you pick power and you back an experienced person in power, or you pick financial services and you go, we need to be in Africa, we're going to back Bob Diamond. And I think, correct me if I'm wrong, but when you raised your first 300 million, 90% of the money came from America, and 90% of that money had never invested in Africa before. So I think there is a real interest, but there's too much complexity. We need to find an easier way to explain Africa and the opportunity, and I haven't found that yet.
We're going to take some suggestions, Yoki, and then...
I don't want to go to the stories on the roadshow when one tries to explain Africa. It's a very, how should I put it this way, for being a European trying to explain somebody that Africa does exist on a map is a bit of an embarrassing story. But I'd actually go back to a different thing, is looking at from a country's point of view, various countries, and why do we invest in X and Y, and what are the sectors? Let's face it, until about 10 years ago, none of the African country, I don't want to say, cared less about how the business environment is actually structured. And since you put the ranking, I mean, my ex-colleagues in the World Bank Group tried to start looking at doing business reports, how do you actually attract investors? Now, you still put Africa on that map, and about 90% of them are in the last 10% of the countries, how difficult it is to do business. And yes, so Rwanda here, and it's very interesting in a way that they made a consistent effort on trying to attract investors by actually simplifying the business environment. Now they are, I think, ranked now 30 or something in the world, but again, it's looking at country after country now in Africa is actually starting to do the same, which to me means that investors, as we have here, find it much more easier to come and do the business, because it's always a two-way street. So one thing is that dream all you want, but if you don't have a receptive audience on the other side, you're not going to do a lot of investments. So I think we need to also start looking at that as when we look at the opportunities, who do we have on the other side? Because that's where you actually have the two things matching, and that's how you attract the investment.
Yeah.
So again, I'm looking at some of those things where Africa could do better, is try to simplify the business environment. Because the fact is that no country in the world ever has actually, first of all, has ever come out of poverty with foreign aid, if I use that word. It's the country itself that gets its act together and tries to make investment. The other one tends to be, unfortunately or fortunately, it's private sector that puts the countries up. So once you look at those, I think it's the opportunities clearly are there, but we need a two-way, three-way street to make it happen.
Yep. First Lady.
I just wanted to add that it is difficult. It may look difficult just looking at the map of Africa and trying to pick a country where you want to invest. I think it depends on what you know about a country. And listening to some of the colleagues sitting here this morning, I've been told that he is a South African and she is a Tanzanian, and so people have connections to countries, and sometimes that's what leads them to go to certain countries. But when you merely look at a map of Africa and say, which of these countries should I go to, it may be really difficult to choose any one of the countries in Africa. And you find it brings a stampede to some of the countries that people talk so much about, like Nigeria and South Africa. And the competition is a bit higher in some of those countries. In some of the other countries which people don't know much about, there is very little competition, and there are opportunities that are really not explored yet. And so I can only talk a lot about Uganda, which I know better. And I know that the opportunities in Uganda really, the sky is the limit. And the markets around, the whole region around Uganda is a market waiting for all the products that can be made in Uganda. And yes, there is oil and gas now in Uganda, and a lot of the investors now are interested in oil and gas. But in Uganda, we also think that agriculture is an area that is very interesting, and we are very interested in it because it will employ many of our young people who are trained but are not employed. And so I would like you to really think about where you want to invest, because how much of the investment do you want to make? Because some areas like oil and gas require a lot of you must have so much money to invest in that area. Agriculture, on the other hand, needs less capital to invest in there. And if you go to East Africa, in a country like Uganda, you have a market, the whole region, waiting to buy food, and that food that can be processed and sent even to markets in Europe and America. But even the region alone, in the Sudan, in the Congo, in Kenya, in Tanzania, and that whole region around Uganda is a market for food produce. And so I think it is very difficult for people listening to us to consider where to invest. But I think where to invest depends on you, how much money you have to invest. You must consider the markets that are available in a country where you want to invest. And I think it's becoming important also to really think about whether that investment is only just for you, or you want to benefit that country to change the population also to become more competitive in a global market.
First Lady, could I just push you on one point on that, which is you've spoken about the surrounding the regional market, and regional integration is a key theme for a lot of investors. This idea that you're encouraging inter-regional trade, and I wonder if you could just tell us a bit more about your sense of where the region is in terms of deepening its integration and improving its connections.
The region, if anybody knows East Africa, the countries of Uganda, Kenya, and Tanzania, the region, we have the countries neighboring the East African countries. The bigger market now is in the Sudan, southern Sudan, and we have a market in the Congo. We have a market in Tanzania. She's talking about Tanzania. She knows it's neighboring Uganda. That's a region that really can be fed by Uganda if you're looking at agriculture. But for oil and gas, we are trying to process our own oil in Uganda. And we are hoping that we will tap that market also for our oil when it's processed. But I am passionate about agriculture because the area I've just talked about has vast fertile land which is just lying there waiting to be utilized. And I would really like to see some investors who are interested in doing agriculture and processing it and selling finished products.
I mean, we journalists hate to ever hand over the mic, but I'm going to try and discipline myself and open it up to the floor. But before I do that, I'm also going to ask all of these guys to think for a moment about, and this is, I'm going to ask you not to talk your book, which is going to be challenging for you, but can you share with us what you think are some of your best ideas? Need not be in your sector, need not be something that you're investing in or even able to invest in, but what is your sort of single best idea that you'd like people to take away from this? And any questions, comments? Could we have a question over here? Could we have a mic in the front, please? And if I could ask people to two questions. Okay, the front row first. And if you could just tell us who you are.
Yeah, good morning. Thank you very much. My name is William Asiko from the Investment Climate Facility for Africa. We work with governments to simplify the business environment. My question is for Scott. Infrastructure investments are longer term and significantly larger than what might typically be a PE investment into Africa. My question is there any investment you've had to walk away from that met your goals, it met things that you liked, but you had to walk away from it for one reason or another, and why? And secondly, in terms of infrastructure, is it a case of more money looking for projects, or is it more projects looking for money? In other words, is this a good opportunity area for PE investment? Thank you.
Thanks. Those are great questions. Before I hand over to Scott, I'm going to take another question or two, and then you'll have a turn. So, okay.
You're testing my memory.
Thank you.
I'll remind you.
My name is Ross Alexander. I'm the Executive Director of Africa Matters Limited, a supporting organisation for this event. African pension funds are a source of capital, relatively small. The regulations on these can allow up to 10% into the private equity asset class. The reality is that it's only 2% at the moment. What can be done to encourage more investment from this asset class in their own continent?
Great, thank you. Okay, Scott, let's hand over on the first one.
Okay, well, I'll take a crack at both real quick if you don't mind. We've had to walk away from projects because on paper it looks like the project is going to work. We're going to undercut the cost of power in that environment. You're going to be able to get a long-dated power purchase agreement. Once we've gotten ourselves to financial close, we've essentially wrung out all the commodity risk, either because of its renewable resource or the cost of fuel has been passed on appropriately. The reason why you walk is because the party on the other side isn't really interested in getting it done. And that's been the issue in Africa. When we started to thematically look at Africa Power, there's 40 some odd IPP and very insignificant default ratio really among them. So once projects are up and running, it's not that big of an issue. It's getting projects to financial closure that's the issue. I had a debate, Africa Energy Forum, with a person from the bulk buyer that's been set up in Nigeria, where they were talking about doing renewables, and they wanted to stress out the system to get the most competitive procurement they could 3-4 years from now. Well, what about all the people who need electricity now? And if you could get solar up in 6 months, goodness, with good consultants on your side, you know how much solar costs. You can, if you're willing to get solar up this year to at least mitigate some of the shortage, you can do that. And so those are the situations. But we've had other situations. We're in Sierra Leone right now where there's a new energy minister who's unbelievably crisp, businesslike, sets a schedule, wants everybody to stick to it, does what's necessary, has goals. So, would Sierra Leone have been, if you were sitting in the Midwest, would that have been first on your list to go to? No, you have to kind of dig down a little bit deeper. To your second question on infrastructure, again, once projects are up and running, a tremendous amount of capital for them. It's a place where the pension funds really ought to be coming in, and my view is that by legislation, they ought to be mandated to have some in-country investments they have to make, and that'll open up a lot of liquidity. Construction, it starts to funnel down a little bit less, that people are willing to take that. Taking that upfront development risk, let's not kid ourselves. AES Corporation lost $70 million developing the Bujagali project in Uganda over a number of years, got nothing to show for it. That project ultimately went forward and was a huge success. But getting these projects to the point where they're ready to hit financial close, that's the area that we play in, but we want commercial counterparties.
Yeah.
If I can just sort of talk to the question about regulation, because, I mean, there are a number of things around regulation. I think it was mentioned earlier about governments really focusing on the business sector, and changes are in place, but you're right. The pension fund industry, the regulation surrounding them doesn't allow them to invest in certain types of assets, even in equities. There are significant restrictions in equities. You come to Europe or even South Africa, they can be 60% in equities. In other African countries, it's a lot less. But there are competing demands. In some instances, the pension fund industry is seen as a way of funding the government's deficit, and therefore the restrictions are created to do that. But for me, one of the biggest policy challenges is it drives me mad when countries issue licenses for assets and resources, and there's no mandatory requirement to list those assets in country after financial close or after first cash flow. Because you want to buy into the telecoms industry in Nigeria, and you can't because none of them are listed. You want to buy into a power project or a port project in Tanzania, you can't because there's no requirement to list those assets. So the average man on the street can't invest. And for me, those are very simple policy decisions. There's one line that can be written into every single contract, which would massively start to create and deepen the capital markets, because then you're creating the supply. You then change the rules for the pension funds to create the demand, and all of a sudden you've got a vibrant capital market. And these are things that can be done without any money. So that's a message to all the policymakers in the room.
But I think it's important from the sponsor side, to say, if you're going to force a listing, you also have to force the local institutional investors to be able to invest.
Yeah.
Without that liquidity,
you have to do both, yes.
You really have a problem. And I also want to note as well from Adam that the Bujagali Dam has ended up being a tremendous success for the people who took that over and got that done.
Yeah. We've got a question at the back. I think there is one on this side and then one on, okay, so one in the middle and then one towards the back. So could we have a mic towards the middle, please?
Thank you very much. My name is Matthias Katamba from Housing Finance Bank in Uganda. I think my question is really open to any of the members of the panel. Private equity is known in its very nature for being short-termist, looking for short-term returns, and the need usually to exit and make your money. Now, while Africa presents good returns today, the reality is that it's really nothing compared to what it can be if there is social transformation as a result of some of your investments. So I'd really like to know what are some of the things that you do to bring about inclusion and to deepen the long-term result of what you do, to bring about social transformation and increase returns for you eventually in the longer term.
Great, thank you. Could we take the mic further back, please?
Good morning, Tom Wilson from Africa Practice. My question's about exit strategies in private equity. I've heard some private equity players and commentators express concerns about how do you exit having deployed capital 5 or 10 years later. Is exiting a problem, particularly given the lack of depth in capital markets? And is that requiring you to effectively develop a different PE strategy for Africa? Thanks.
Great. If there is one more question we can take. Okay, so on this side, please.
Yes, I'm Jonathan Moore. I run the Mining Indaba down in Cape Town. My question is, we read each day about the vast amounts of capital that have been raised by private equity, so there doesn't seem to be a challenge in raising capital. My question is there a catalyst that you folks need to see in order to see us start to see that capital be more actively put to work?
Great. Okay, so 3 great questions. I'm going to throw it open to Jyrki. I'm going to ask you to sort of keep your answers to about a minute. So, who wants to take the first one? Okay.
Just a quick one on the question of PE versus permanent capital and the long-term maturity. I mean, one of the interesting things when we went to the market was that actually most of our investors, they're not hedge funds, they're actually long-term investors. Now, we are not running a PE play because if you look at the regulators, they're saying we don't like the PE plays in the banking sector because they tend to come in and go out. We are permanent capital, and that's one of the tricks that we've actually used. So if investors want out, they sell it to, we are a London-listed entity, so they can get out whenever they want to. The challenge actually is to get the longer-term capital into the markets in an appropriate manner. Yeah. And for PE plays to figure it out, banking particularly requires more permanent structures than just going in and out. So that's one of the reasons why we've been successful in raising money, is that investors can get out when they want, but they're also looking at very, very long positions in the long term.
Yeah, I think that touches to the second question, which is also exits. But let's who wants to take? Okay, Scott.
So I would say that, in general, if you look at average hold periods for private equity, they're over 5 years. How many investors do you have that will hang around in 5 years in a growth environment? I think it's a lot longer than you think. If you talk about it, so our partnership with GE in Ghana, it's going to take 1.5 years to get a project in construction, another 3 years to get it up and running, a couple of years to get it going. So that's going to be a longer-term investment that's transformational. So the concept of private equity is just in and out. I guess maybe in our dreams, but that's not the reality for us. We think it's relatively long-term, and as growth private equity versus LBO private equity, you haven't created value for an exit unless you've done something transformational. So by its nature, your stage of capital fit a need, and now it's a need for another stage of capital, perhaps more infrastructure related, leading to the question on exits. So that's my view.
Yeah.
I guess, when it comes to liquidity and exits, we're an exit. We spend an awful lot of our time looking at IPOs and pre-IPOs with a view to taking on the next stage from the private equity. And as more funds like ourselves continue to grow, one of the areas you're seeing actually is the explosive growth in the domestic local pension fund industries. And in Nigeria, that number is growing at 20% a year, roughly about the same in Kenya. And so the extent to which exits will take advantage of the local capital markets, I think that's incredibly important. On the other side, I make money if my investors make money. If my investors don't make money, I don't get paid. So it's in my interest to ensure that the environment under which my investments are working in is the most optimal environment possible. So we spend a lot of our time in conferences like this with regulators as well as with investors and investor companies, describing the sort of environment that allows our investments to flourish. So to the question, the man from Housing Finance in Uganda, we spend an awful lot of time trying to help the regulators create the environment that allows our investments to flourish. And we're not just in it for if we continue to make money for our investors, they're not going to take the money elsewhere. So it's in our interest to ensure that environment continues to exist.
I'm going to stop this conversation here. We've got about 2 minutes left, and I promised everyone your best ideas. So we're going to start on that end. 30-second elevator pitch. What is your best idea for?
I think that the significant lack of Pan-African brands is one of the biggest opportunities for African investors. There are almost no Pan-African brands. We export our coffee raw, our cocoa raw, we export our tea raw, and our fashion raw. So I think that the biggest opportunity for the local African investor, or the biggest opportunity set, is creating a Pan-African brand.
Great. Scott?
We've been only doing utility-size power plants, so whatever ilk, off-grid power, getting out to not just mining companies and large users, but villages by villages, building that up as a company of scale.
Sunny?
So I think one of the most compelling potential investment opportunities in Africa is to create either a regional or a Pan-African company that makes very basic healthcare services accessible. So something related to either kind of mobile dental clinics, for example, or healthcare diagnostics units. These are hugely underinvested sectors that have huge demand. You could almost argue that have perpetual demand and actually have a very low cost of capital to start up.
Yoki?
How do we actually take M-Pesa, which everybody loves, Africa-wide, in a completely different fashion? So I think that's the only way that we can get the underserved segments to call it financial markets. And nobody has cracked. Everybody tries. The Apple tries, Google tries, M-Pesa tries. There's no system yet, but I'll tell you, the whole future of banking is going to be completely different than what it is today.
Yeah. Rob?
Okay, so we've got the mobile phone revolution, we've got the payment M-Pesa revolution. What's going to be huge next, in my view, is the e-commerce revolution. The logistics and supply side may need some African solutions, but I think e-commerce is going to be huge. And if I can say one more thing, wouldn't it be nice if some of the African governments dropped these stupid visa requirements and made intra-African travel a lot easier? I mean, why do we need visas?
Yeah, great point. First Lady, your best idea? What's the biggest opportunity?
I am looking for private equity because we are stuck and crippled by commercial banks in Uganda, and we're looking for opportunities through private equity, and I was hoping that this discussion would bring some ideas of how we can begin to get people who are investing in Africa and in Uganda in particular to bring private equity to our economy.
Thank you very much. Ladies and gentlemen, this has been a great panel. These guys have not just shared their extensive knowledge and experience in the continent, they've also given you some of their best ideas. I'd like to ask you to join me in giving them a great thank you.
Jonathan, and a round of applause for you as well, because that was very, very ably and energetically chaired. So Jonathan Rosenthal, thank you very much. Panel, please stay there, don't go away, because the First Lady reminded you a short time ago essentially why you're all doing this. It's not just to make money, it's not just about your bottom line, not just to fly around in fancy Vista jets, Rob. It's also about transforming the lives of people on the continent, because at the moment they're underserved in so many different ways. And to help us focus on that and to concentrate the mind, I'm delighted to welcome up on stage for just a few minutes, because it'll help you refocus. I mean, you're focused already, but it's useful to think about the broader picture, about the 1 billion people and rising that you're all serving in your various ways. Hugh Jones is the CEO of the Virtual Doctors Project. You've all heard about Médecins Sans Frontières, Doctors Without Borders. Well, this is a project which started off in Brighton in 2007, and Hugh was inspired to set it up by a tragedy that he witnessed up close and personal. He'll tell you about it and how you may be able to help and perhaps invest, not necessarily for your bottom line or for the kind of return that we've been talking about for the past 2 days, but for that human connection, that human return. Hugh, please come up on stage.
Thank you very much indeed. My name is Hugh Jones. I'm director of the Virtual Doctors. We're a charity actually based just down the road in sunny Brighton, which you must visit if you're here for the first time, even if it's only for the fish and chips, which are fantastic. I suppose that I've got to sort of tell us... Oh, you can hear me now, okay. I have to tell you a little story. Many, many years ago, I was driving in a very remote area of eastern Zambia. And as I drove down this very dusty dirt road, I started to see drops of blood on the track in front of me. And as I kept going, I saw more and more blood. And I thought perhaps, well, I'm quite close to a national park here. Perhaps a lion or a leopard has killed an animal and dragged it up the road. But as I came round a corner, I saw this man cycling his bicycle with his wife sitting on the handlebars, resting against him for support. You often see this in Africa. But she was heavily pregnant, and there was blood pouring from her. She had prepartum hemorrhaging. And I quickly helped them into the back of my Land Rover, and I drove as fast as I could to try and find help. And as I drove, I asked the man, well, what had happened? What's happened? What are you doing? And he said, well, we tried to go to the health centre near the village where we live, but there were no doctors available at all. Now, that's a common issue in rural Zambia and many other parts of the region, as I'm sure you're aware. Acute shortage or almost no doctors at all in rural areas. And that actually means that the majority of the population, particularly in Zambia, don't have access to a doctor. And there were the health workers tried to do what they could, they couldn't help. There was no ambulance available, no transport of any description. So that man did the only thing he had available to him, and that was to try to cycle his wife to the nearest hospital. Now that hospital was well over 100 kilometers away. 100 kilometers trying to cycle your pregnant wife who's bleeding. And it was a very, very hot day when we picked them up, and she lost a lot of blood. And she just very quietly, very gently passed away in the back of my Land Rover. And there was nothing I could do about it. And something struck me at that moment. And it wasn't the sadness or the shock of watching this very young, beautiful, pregnant woman bleed to death in the back of my Land Rover. But it was more the feeling of utter helplessness and questioning, well, what could I possibly do? I'm not a doctor, well, I wasn't at the time. I'm just here out in the middle of Zambia on my own. I'm Hugh Jones from the UK. What can I do? And it was a very powerful feeling, and it made me wanted to do something about it. And as the years and months went by, I spoke to friends of mine, some of them doctors, some in Zambia, some in Malawi, various other parts of the region, and all around the world. And I told them about this story, and they all expressed the same desire, and that was to offer their help for free. But there was one problem. None of them were in rural Zambia or any other parts of Africa, rural areas, for various different reasons, whether they were actually in Zambia itself or in the UK. They couldn't go and work there, they didn't want to be there or couldn't be there. So the question was, how could we connect them? How can we link them to the rural health centers, just like the one that man took his wife to? Now, there's something very exciting taking place in Africa as we speak. In fact, there's a revolution taking place in Africa right now. And this is a bloodless, very positive revolution. And that revolution is technology. And in particular, the mobile phone. Because where the mobile phone goes, as you know, so does the internet. And it's having a huge impact. It really is. I'm sure you're aware of this, that communities who've never had access to a book before now have access to the whole world. And so that's what we're doing, the virtual doctors. We're harnessing the power of the internet through the mobile phone network, providing really, really simple, easy-to-use telemedicine technology that allows health workers in rural areas, just like that clinic that guy, the man took his wife to create very simple electronic patient files with photographs, and they send them to our volunteer doctors all around the world for diagnosis and treatment advice. It's a very, very simple and very effective solution to a major problem. But we need help. We're a charity, we're a non-profit. So we need help. We need money to expand our work, not just in Zambia, but to all the other countries that have shown huge interest in our service. And we need government support. We need to talk to ministers in those countries, particularly the health services, in order to provide our service. So I had a 5-minute slot. I'm almost done. I'm here. My name is Hugh Jones. I have some business cards, and I would love to talk to you about our work and how we can work together. Thank you very much indeed.